Joining me now for some of the big movers, we are joined by Diane King Hall, host of Morning Movers, taking a look at, first up, we're looking at the IBM Confluent deal.
Yeah, this deal has shares of Confluent rallying more than 20% off the back of this news. So IBM is going to buy Confluent for $9.3 billion. It's a big bet on increasing its footprint in AI, but we're talking about AI services here. They agreed to buy this, what Confluent does. It's a real-time data streaming company. Again, a $9.3 billion deal. It marks one of IBM's biggest bets on artificial intelligence. IBM's going to pay $31 a share. The deal's expected to close by mid-2026. In terms of what Confluent does, its software helps businesses feed live data, real-time data into AI systems. It powers tasks like fraud detection, for instance, for Instacart, dynamic inventory tracking for Michelin. It underscores IBM's shift under its current CEO towards higher growth AI and software revenue. This is its biggest acquisition since Red Hat, back in 2019. Again, IBM shares rallying big on the news, which is typical, especially when you see like the price tag. And keep in mind, the shares had been lower before today's move, but year to date, it gives it a gain for the year. IBM fluctuating around this news. Is initially in the pre-market, it was under pressure, which is typical with the acquirer, but it seems like the street's read through on this. It's not a bad move for IBM, given that the shares are a little changed right now, Nicole.
I mean, it really is amazing to have an $11 billion deal, and so big move there for Confluent. Let's see, right now it's up, looks up 29%.
Yeah.
It's really moving.
Huge
and
move.
IBM gets the 1.2% up. I mean, sometimes, as you note, like the acquirer
exactly.
goes down. Okay, let's get to your next one. You're looking at that Tesla downgrade. What's going on there?
Yeah, so Tesla getting dinged this morning. We got an analyst moving to the sidelines on this. This is Morgan Stanley. They had been constructive on Tesla, but now they've moved to equal weight on it from overweight on it. It's not completely throwing out the baby with the bathwater because they've raised the price target to 425, which is up from 410. So Morgan Stanley, it's a new analyst covering this. You guys remember Adam Jonas, but it's a new analyst covering this now. And so that is the shift that they're shifting how they do the rating of the stock. They do still expect Tesla to lead in autonomous driving, clean energy, and robotics. But really, the new analyst is Andrew Percoco, who says that this is already priced in. So again, he is still, he's still constructive on its positioning in FSD. He calls it a real game changer, a significant competitive advantage over rivals. But just because it has that advantage does not mean that he's bullish on the stock given where it is. He thinks, again, this is full valuation here, and you want to wait for a better entry point on this one. Nicole.
Yeah, I saw a few downgrades today. Tesla, Netflix, 3M, Marvell, Rivian, Lennar, Carvana. So there are some names to watch. There's a lot, check them out, folks. And I'm only naming some. Lucid's in there. It's interesting how you have a few of these car-related names. Last but not least, Five Below. We were walking together. We saw one.
Yes.
Let's talk about Five Below.
Yeah, so Five Below getting some love from the street today. Shares moving more than 1.5% higher off the back of this move. This is from Truist. They've raised their rating on Five Below to a buy from a hold. So they are moving off the sidelines on this one. They call the retailers, it's a discount retailer, it's third quarter performance, a quote, game changer. They've moved their price target to 260 from 179 from Friday's closing levels. That implies more than 20% upside. So even with the momentum that we've seen at Five Below year to date, I mean, that stock has been a huge outperformer. Before today's move, it was up more than 65%. They say that this is still trading below historical valuation levels, and they think that the company has, quote, unicorn-like growth, and they think it could justify a much higher multiple from here. They like the growth story across the board. They think it's sustainable, whether we're talking about earnings upgrades, stronger comps, improved merchandise value, and then just the credibility of the turnaround there. They'd had last year some merchandise missteps. It's been a different situation this year. They've leaned into trends, and the trends have worked. So like, for instance, the K-pop Demon Hunters, merchandise like that, just trending things that the Gen Z, Gen Alpha, and even millennials likes there. They've had big gains in traffic traffic and the average ticket size and overall comps. So they like it. The wind is at the back of Five Below once again, Nicole.
All right, Diane King Hall, great to see
Great
you.
to be with
All
you.
key names there.